Question for you, and the question has to do with Netflix. Will Netflix ever be able to fix its horrible stock price? Netflix stock has been in the garbage for a very long time. And I'm going to talk a little bit about Netflix and explain to you some things that Netflix is actually trying to do to fix what is just an inevitable ugly plummet in the stock price. So get comfortable, buckle up a seatbelt. We're going to get started on the Black Financial Channel right now. Hey, what's going on, guys? Welcome to the Black Financial Channel. That's theblackfinancialchannel.com. My name is Dr. Boyce Watkins. I'm your friendly neighborhood finance professor. On the Black Financial Channel, we talk about black wealth and black economics every day, sometimes as much as 10 times a day, under one condition. The condition is that we are black first. The condition is also that we believe in black wealth. We teach our children black wealth. We also prepare for the future. If you are a member of this mindset, if you have a money mindset where you are headed toward prosperity, put a hashtag B1 in the chat. If you want your children to win, put a B1 in the chat. If you believe that black people can close racial wealth gaps and become the most economically intelligent group of people on the planet, put a hashtag B1 in the chat. That's the future that we are drawing. That is what I call Project 2070, where you guys know I'm a financial scientist. That's what I do. And my belief is that if we do what we need to do right now, then by the year 2070, black people can actually lead the world in economic intelligence beyond the Jewish community, beyond the Asian community, beyond the Arab community, beyond the white community. I believe we can be the best in the world, but you got to have the right mindset. So that's why we do what we do every day. All right. So anyway, let's get started today. So the stock market just opened, and I'm going to take a look at the market in a second. I'm getting prepared for a presentation I'm doing for Black and Decker company. They actually want to talk a little bit about black wealth today. So I look forward to actually educating their team members on some of the black wealth and black economics principles today. That's going to be a lot of fun. But I wanted to talk about Netflix. I was reading some information about Netflix, and how many of you have a Netflix subscription, and how many of you share your password? Give me a yes in the chat if you share your Netflix password. I promise I won't tell on you. I won't report you to the feds. I won't let Netflix know what you're up to. But how many of you, be honest, come on, let's be honest. How many of you share your Netflix password? Give me a yes or no. Like yes or no. The answer for me is yes. My whole family gets all my passwords. We got Disney and Netflix and HBO Max and there's so many in Paramount Plus and it's crazy. They suck you in. You know, it's almost like entertainment. You become like an entertainment crackhead where they literally suck you in with all these new series where you feel like you have to watch it. You're like, oh, I got to see that. I got to see that. And so right now, I think me and my wife, our favorite two shows are that we're watching right now are Peaky Blinders and Better Call Saul. Those are the two shows that we're into right now, and it's must watch TV for us. Our kids watch Stranger Things, and there's just so much good stuff out there. But anyway, let's get let me talk about Netflix stock. I don't know if any of you have owned Netflix stock, but I'm actually put the chart on the screen because I want you to see what kind of a bloodbath Netflix stock price has absolutely been. I mean, it's just a complete mess. It's been, I mean, my Lord Jesus, it's been getting hammered pretty bad over the last 6 months. And let me see. I'm going to share my screen real quick so you guys can see what I'm looking at here. You can see on this tab, which will be on your screen in 3, 2, 1, and go. You can see that Netflix stock over the last 6 months has dropped by 71%. Oh Lord, that's a lot of loss. A lot of billions dropping off into the abyss. Year to date, it's gone down 71% this year alone. The last year, it's gone down 65%. Now, if you're a 5-year investor in Netflix, you actually made a 12% return on investment, which is probably a disappointment, though, because you expected to make a lot more. Because if you look here, Netflix stock, I believe it reached as high as almost $700 a share. Looks like, let's see, what's that, 640, 690, 690. It looks like that's the peak that Netflix stock hit. Actually, the 52-week high is $700.99. So Netflix stock went from almost $700 a share, or actually 700 exactly, to 170, 160. That is brutal. I mean, that is so painful. And that's a reminder, if you don't understand why you diversify, not just amongst different stocks, but also different asset classes, that's an example why. You have people that will buy a stock. the stock will do really well. And they'll say, I've got this stock, Dr. Boyce, and it's making so much money for me. And I'll say, get your money out. Take some of your money out now. That's your escape. That's your opportunity. No, I'm gonna double down. I'm gonna put it all in there. Well, the problem is if you think that way, you're basically a person in Vegas who says, I'm going to keep putting it all on black because black won 3 times in a row. And instead of realizing how lucky you were and that it's time to get out of the casino, you double down and triple down and quadruple down until you actually lose everything and eventually go broke. I don't want you to go broke. And I can tell you this, my wife knows that I love to play poker, and I'm a pretty good poker player. And one of the things that last time I played poker, I'm really good. I've actually won tournaments with 800 people in them before. I'm not kidding. I'm not making this up. It's a great game of strategy and psychology, and it's such a fun game. Well, I sat down at the table out in Montana somewhere with a bunch of cowboy-looking guys, look like they probably kill black people on the weekends. And I sat down with $200. Within 2 hours, I had $750. I kid you not. I had a big stack of chips in front of me. Like I'm looking over my chips like this. The guys are sitting back and they're just pissed. They're looking at me like, I'm going to kill that son bitch. When I see him outside, I'm going to rob him in the parking lot, right? And I'm sitting there thinking, I'm going to have to run away from this table because they're going to come and get this money back. Well, the thing was that, when I was ahead, I didn't feel the need to be greedy. I didn't want to keep going and double down and triple down. I said, you know what? Things are going well. Let me take this money, take my wife out to dinner, and laugh about the fact that we just took these guys for all their money at the poker table. But anyway, the point is to say the same thing is true with investing to some extent. When you are winning, that's when you take your chips off the table. That's my point. When you're winning, when you're ahead, that's when you want to back away a little bit. Most of the time when money managers, big money managers are doing really well and they have a stock that's just killing the game, they don't invest more in that stock. They invest less in that stock because your luck will eventually run out. Give me a yes in the chat if you understand what I'm saying. Give me a yes in the chat. Also, please hit the thumbs up button. Thumbs up, thumbs up, thumbs up. I keep looking at my watch because I want to make sure I don't get my time wrong because I got a presentation with the Black & Decker people in a little bit, and I want to make sure I'm not too late for that. But I had to come in and talk to y'all real quick about what I was finding out with Netflix. Okay, so with Netflix stock, here's the deal. Look, stock's down over 70% this year. Does that make it a good investment? I'm not sure. I have to do a little more research, but it certainly makes it a better investment. The lower the price goes, the more it gets into that range of acceptability. I told you guys this morning, I like Coinbase. I actually bought a bunch of shares of Coinbase this morning because I think Coinbase has been body slammed enough that when crypto starts to recover, when the economy starts to do better, I believe Coinbase stock, I'm going to look back 2-3 years from now and believe and find out that this was a good investment. Also, Netflix has lost. They've been bleeding subscribers. They lost 2 million subscribers in 1 quarter. That's horrible. That's absolutely horrible. Third, the one thing about Netflix is that now they're starting to reconsider a lot of the things that they did and did not do before. You see, when you're winning and you're high flying and you're making all the money and everybody's trying to be like you, then it's easy to get caught up in thinking that you're the smartest person on the block, that you've got all the answers and that all the old school approaches were wrong and that your new school approach is correct. And Netflix became very powerful by basically kind of outdoing Blockbuster. They beat Blockbuster to the punch when it came to using technology to distribute their content. Blockbuster could have bought Netflix for almost nothing. That makes Reed Hastings look like the CEO of Netflix. That makes him look like a genius. And all these things are relevant and adequate. Now, the challenge though is that Netflix's position of dominance was really hit hard. We talked about this on this podcast when Disney jumped into the streaming business. We talked about the fact that Disney's entry into this business is a huge threat to Netflix. Disney now is growing at a rate that Netflix can only dream about. Disney's subscriber base is a little more than half of Netflix subscriber base, and that is a huge threat to Netflix because Netflix is what they call a pure play. Netflix is a one-trick pony. Netflix, all they do is they will stream your movie for you. That's all they can do. Well, Disney says, hey, we can stream your movie, and we've got amusement parks, and we own television networks, and we have we make movies of our own, and we also do these other things over here. We have merchandising. We have whole entire departments that have nothing to do with streaming. Streaming is what we do for fun. Streaming is what we do because the pandemic is here and we're trying to make a little extra money, but that's not our main gig. That's our side gig. That's not our main chick. That's our side chick. So Disney is a huge threat. And we talked about how Disney was a threat. And also what you're seeing Paramount Plus jumping into the game, HBO Max jumping into the game. And I remember thinking about this extensively because I had a chance to sit down with Will Smith's brother, Harry, who is a really smart guy. He's a financial guy just like me. And Harry and I really hit it off. I've never met Will, never met Jada, but I have met Harry several times. And I love talking to this guy because he's super smart. And one of the things that he talked to me about was that when Will Smith made that movie Bright, anybody remember that movie Bright? With where they had the warlocks and all that. He said that Netflix outbid all the other networks, all the other studios, like by a long shot. Netflix body slammed the bids of all the other studios because Netflix had the money. They had something that Warner Brothers didn't have at the time, which was monthly recurring revenue. They had over maybe $1 or $2 billion a month coming in just because. So they were able to outbid on all these new projects and get, and basically make all the other streaming services jealous. And that was kind of the strength that they had. The challenge now, though, is that a lot of these other networks have taken their stuff off of Netflix. They stopped licensing to Netflix and they started using their own content, which requires Netflix to spend an ungodly amount of money on content. A lot of these streaming services are overpaying for content. And I'm just telling you, I know people that make movies and they're doing really well. And, I told you guys, Atlanta is the new Black Hollywood. That's where it's happening. That's why my wife and I just bought a house in Atlanta. We have an office in Atlanta at the Black House, started by the Tulsa Real Estate Fund, because Atlanta is where I want my daughter to be because she's an actress and a singer and everything else. And I said, you got to be in Atlanta because Atlanta is where the future is when it comes to making movies. So a lot of my friends in Atlanta are making movies for streaming services, Netflix and Hulu and whatever. And they're making a lot of money. That's because these networks are overspending on content. They're just dumping money into it. They're going deep in debt to get more money to compete in this crazy arms race. Eventually, this is going to crash everything. And in fact, it's already crashing because the stock market is crashing. So eventually, what's going to occur is these companies are going to start pulling back on the money that they spend. Also, they're going to have to be more creative in terms of how they deliver their content. So Netflix has been speaking about things that they wouldn't have considered, say, 5 years ago. They're talking about having content that's ad-supported, an ad-supported kind of tier where you can pay less money, but you got to watch some commercials. That was something that was taboo just not too long ago. They used to have a strategy where they would do things that were crazy, like skip the pilot. They would have you, they would tell the content creator, hey, just make the show. We'll buy 2 seasons. We're not even going to put a pilot out and evaluate. We're just going to let you, we're going to just buy 2 seasons from you and we're going to dump money on you. Those days are probably over. A lot of these series that they overinvested in went bad. And now their shareholders are looking back and saying, what are you guys doing with our money? You're wasting our money. There's a whole theory in finance, by the way, called the free cash flow theory. And we used to study this a lot when I was in graduate school. And the free cash flow theory basically says that when you have too much money, you tend to do stupid things. So CEOs, when they have too much free cash flow, they just start doing this. They start doing like the rappers in the strip club and they start making it rain on everybody. And you ever see somebody that just got paid? It's Friday night. And what do? They're real generous. They're buying up the bar. They're buying new sneakers or buying a little bit of this, a little bit of that. But then when you fall behind on the bills, or your credit card gets declined or whatever, then suddenly you become financially conscious. Suddenly you're like, whoa, wait a minute, we're about to run out of money. So you start doing things a little bit differently. So you stop tricking away your money the way you did before. So Netflix is in that stage right now where their investors are looking at this company and saying, wait a minute, we've been getting killed. We've been losing a ton of money because you guys have been tricking away our money, and we're going to put an end to that. So some of that the way they acquire content, I think, is going to adjust. They're also going to shift a little bit more toward quality over quantity. Netflix used to buy any and everything. Almost any content creator that had any piece of crap that they wanted to put on Netflix would buy it because they had the money. They're going to stop doing that. They're going to start focusing on quality content and more original content, so they can have some of these blockbuster hits that tend to drive growth, like Stranger Things or the Squid Game. They don't want a whole bunch of crap that nobody's ever going to watch. They want to have a bunch of stuff that people are going to watch. There's also conversations about Netflix including live sports, which is something that they never thought about before. They never really wanted to bid on that kind of thing. Whether now they're bidding on the rights to Formula One, and so they're going to start incorporating live sports. So now it's interesting because before Netflix was the leader and they were doing innovative things that everyone else was copying. Now Netflix is actually copying the people that were copying them. Now they're looking at legacy media companies and saying, maybe some of those old ideas that we threw out the window weren't so terrible in the first place. Maybe we should do a little bit of what traditional Hollywood was doing when it came to distributing their content. Now, do me a favor, take 1 second, please. Hit the thumbs up button, thumbs up, share, subscribe. My name is Dr. Boyce Watkins. You're watching the Black Financial Channel. We talk about Black wealth and Black economics every single day. You ain't got to be Black to be here. We love everybody, but I am here for the Black community first. I am 100% B1, and I want to remind everybody two things. One, I have an ebook, a very short ebook called How to Build Wealth by Investing $5 a day. It is a simple $5 a day investing plan that I want every single family to implement so that your children are rich and not poor, so your children are ahead of the curve and not behind, so your children are out here succeeding and not failing. I don't want your kids out here economically naked, so I need you to start preparing. And if you want a guide, just go to blackmoneyminute.com. The book is free. I made it available to you for free. You can buy it on Amazon if you want to pay for it, but if you want a physical copy, you can do that, but you don't have to buy a physical copy. The ebook is free. Just go to blackmoneyminute.com, because it only takes a minute for you to become a financial genius. It only takes a little bit of time for you to become the perfect investor, but I need you to invest just a couple of minutes for your future so that you're not struggling. I don't want your kids to have a hard life. All right, so anyway, let me keep going. The last couple things that Netflix is doing that's really interesting, that's going to change their strategy, is they're going to stop with password sharing to some extent. They're not going to kill it altogether, but they are looking at those households where you're oversharing your password or you're sharing it with people that are outside your house. I think they're going to put an end to a lot of that in order to monetize it. They're referring to it as we're going to try to start monetizing password sharing, which is their way of saying we want to get a little bit of bread out of those people who are taking all of our bread, right? So that's going to be interesting to see how that plays out. I don't know if that's going to work out for them or not because there's so much competition with streaming services. But what I find is that it seems to me that when a network comes out with a great show that you feel like you have to see, or a great movie that you really want to watch, a lot of people are still willing to go ahead and sign up for these streaming services. The interesting thing about Netflix is that they are so big. I think they have 222 million subscribers. The whole debate before was, how big is the addressable market? How big can they get? And ultimately the problem is that, they were saying, oh, there's 800 million people out here that we can sell our service to. I don't think they're going to reach 800 million. That's a big number. There's only 7 billion people on the planet. I don't really know if 800 million is a feasible number. So what was going on was, before, the growth rate that the market expected for Netflix was, in my view, incredibly unsustainable. When that stock price hit $700 a share, that was ridiculous. Now at 171, is it a good investment? I don't know. Again, I got to do a little more research because I haven't really done that much of a deep dive just yet. But I speculate that perhaps if it keeps dropping, maybe there's a point where it makes sense. But right now, there's so much uncertainty in the market that you got to be careful. And in fact, by the way, this morning it looks like the market took a little bit of a bump. That was expected because you've just been hit so hard that you tend to have what they call reversals short term, where when the market goes down, there tends to be an overreaction. And the next day, when people kind of sober up and realize what bargains are out there, they come back and they start buying again. So a lot of the experts are starting to buy stock. I'm an expert. I'm buying stock. I'm not running away from the market. I'm running toward the market because I want to buy things when they're cheap. The number one rule of getting rich and building wealth is buy low, sell high, not buy high, sell low. A lot of people buy high, sell low because, unfortunately, a lot of people follow the crowd. This is what Professor David Hirschleifer, who was on my dissertation committee, refers to as the herding effect. He said that people tend to follow the crowd even when the crowd is wrong. And the problem is, if you keep following the wrong crowd, like your mama used to say, if you follow that crowd will lead you into a ditch. So I'm telling you guys right now, do not follow the crowd. If you're going to follow anybody, follow your own intelligence. And maybe if you want to, you can follow me. I'm not here to tell you what to do. I'm just here to make sure that you have what you need in order to be successful, because I'm telling you, a lot of the reaction that a lot of people are having to this market is wrong, and they're going to lose money because of it. You don't go buying everything when prices are high. You buy when the prices are low, and then you sit back and wait in the cut until the prices go back up again. That's where rich people come from. hit the thumbs up button. Thumbs up, thumbs up, thumbs up. One last point about Netflix stock in terms of what changes they're making is Netflix is talking about now they're talking about going from being a pure play company to being a more diversified company. What does that mean? Well, before Netflix's distinction, the thing they used to brag about is, well, the only thing that we do is we make movies. That's it. We make our movies and we distribute our content, and that's all we do. We don't try to do 50 different things like Disney. We just do one thing. Well, all that sounds great. Like when you're winning, it's easy to take something that you're doing and to act like that's the most brilliant thing in the world because no one's going to debate with you because you're winning, right? So a lot of times, think about this. When we watch it's like watching a basketball team that's winning championships. People will copy every single thing that they do, even if it's wrong. Like they'll copy. They'll say, well, every day before the game, they have a pregame meal 20 minutes before the game, so we got to do the same thing they're doing every day. But or whenever they play, they always run the triangle offense, and so we got to do the same offense because that's how they're winning championships. But the thing that you don't understand is that if they're doing 80 different things to win a championship, maybe 30 of those things are just not optimal. Maybe 30 of those things are not actually helping them win. They're actually holding them back. And it's the other 50 that's actually helping them win. So my point is that because Netflix was doing so well, Netflix became the gold standard on how you run a streaming service. They're not the gold standard anymore. They're looking pretty bad right now. And one of the things that they're starting to do is actually imitate the companies that used to sort of be jealous of Netflix, the ones that are now competing with Netflix. So they're saying basically, look, we've got all these subscribers, and I think this is a great idea. Netflix needs growth. They got to figure out growth, and the problem is they can't keep growing vertically. They can't keep growing in terms of number of subscribers. It's impossible. You don't have enough people on the planet to. How are you going to get 1 billion people to have a Netflix subscription? It's hard as hell to do. But how about this? How about you go back to those same subscribers that you already have and sell them something else? That's what Jeff Bezos did with Amazon. That's all he did. He started off selling books to his subscribers, and then he came back and said, wait a minute, if you're buying my books, you probably want to buy other stuff. So he asked people, well, what else do you want? They were like, oh, we want power tools, so we'll sell power tools. Or I want a trampoline in my backyard for my daughters. Oh, well, we can sell those too, right? So sometimes getting more people is not always the only answer. Sometimes offering more things to those people is the appropriate solution. And I think Netflix is headed in the right direction with that. They're talking about offering gaming and a few other things. So if I sat down with the CEO of Netflix, I would probably say to him, let's look at your subscriber base of all these people that are sitting there glued to your app. What else can we offer them where they'll pay you an extra $2 or $3 a month in order to get access to this thing? And let's go outside of just the movie box. Your strength is not your content. Content's everywhere. People can get content anywhere. Content's like there's an oversupply of content. Your strength is not content. Your strength is your subscriber base. How do you optimize that subscriber base? That's what I would say to the CEO of Netflix if he and I were sitting down right now, because I think there's a good opportunity there. So now that I'm thinking about it, I'm literally processing this out loud. And the more I'm thinking about this, the more I'm realizing that they're probably thinking the same thing that you and I are talking about. I think Netflix is going to end up being a good stock long term. Maybe short term, you're going to see some bumps in the road, but actually, I'm going to go and hang up with you guys right now before I do my presentation for Black & Decker and their team over there. And I'm actually going to go buy me some Netflix stock. So in the beginning, I told you guys I wasn't sure if I like Netflix or not, but actually, I think I do. I'm not telling you what to do, but I am going to tell you what I'm about to do. I'm about to go buy me some Netflix. All right, guys. Well, I hope you have a wonderful day. I hope this conversation was helpful to you. Also, if you want a free e-copy of my book, How to Build Wealth by Investing $5 a Day, please visit blackmoneyminute.com. And either way, when you get on the email list, I'll send you lots of stuff every single day so that you can learn and become a better investor, because I want you to be successful. Also, I want to remind you guys, don't forget the All Black National Convention is happening October 28th through the 30th in Charlotte, North Carolina. This is where all the B1 people gather. We talk about investing. We work on relationships. We have panels on politics. We have the B1 Gala. We do crypto. We do all kinds of stuff. It's a great event. It's like a big family reunion. You're going to love it. Bring your kids. We have a whole educational track for children. Your children will become more financially educated than the average adult by the time they leave us. So feel free to go to boycewatkins.com and take a look. And I'd love to see you at the convention in Charlotte, October 28th through the 30th. All right, guys, have a good day. God bless you. It was wonderful talking to you. And I hope you guys do well and make a ton of money. I'll see you soon. Take care. Peace.